Record Keeping and Taxes. Prepared for and presented at the 2019 Square One Entrepreneurship Training Program. Square One is a program of the Center for Emerging Technologies. CET is an affiliate of the Cortex Innovation Community. Square One is funded in part by the Missouri Technology Corporation.
I'm Kimberly Hughes Gill. I'm founder and CEO, president, chief bottle washer, cook, and all for BKJ and Associates, which is an accounting and tax service. It started back in 1994 as B&J Accounting and Tax Services, and as a single parent, I had two young girls, which by the name of Brianna and Jamil, and I'm Kimberly. So that's the BKJ. So from there, we've evolved. We started with our core services just being taxes and tax preparation. I'm a former Internal Revenue Service employee of about 8 years, and that was my first career job. And from there, I went on to audit positions with the City of St. Louis, with Edward Jones, some other private equity firms. And so from there, as of 2007, I decided to go with BKJ and Associates full-time. All the other times, it had been part-time. So my youngest daughter, who probably will come in any minute now, she's just flown in town for her job. And she wanted to hear my presentation. So she'll sneak in here in just a moment. But from that, when she went to college, I decided to go full time. And so from then on, here we are. I do a lot of consulting work. I'm a subcontractor for UHY CPA firm and tax advisors. I also do other independent contract work. And I have about 250 to 300 individual and small business tax returns that I do in the tax season solo. So I'm a busy girl, and right now this is an opportune time. I love these type of settings. I love startup energy from people. I like to see, hear you be creative and want to try to put your business on the right track. And so that's the role I try and play in supporting you with your efforts with record keeping and just general basic taxation issues that may pose you as you start up with your structures. I'd like to poll the class. Kind of tell me, what's the business types that we have here? Are we service industry? Are we manufacturing? Consumer products? Okay, just a poll. Consumer products, how many of you are? Consumer products, okay.
It's 1/3 biotech, 1/3 computers, 1/3 consumer products.
Okay, all right. In any other manufacturing, any other industries outside of the consumer products?
Consumer product manufacturing.
Okay. Technology? Okay. Anything else outside of that? Food? Okay. All right, that's good to know. Just in general. I like things pretty casual, so, as I go through the presentation, please feel free to, if there's something that you'd like to know or like for me to expound on, just kind of cue me up, okay? Is everyone's business, you've set your structure? Is there anyone who has not set up your structure? Okay, and when I say set up your structure, meaning determining if you're going to be a LLC or if you're going to be a S Corp or partnership or sole proprietor, that's what I mean when I say set up structure. Okay, so everybody, we have a foundation pretty much there, other than a few people. Okay, but you're on your way. Those that don't have it, you're kind of putting it in place. Okay, all right, so with that means that we all have federal ID numbers, is that correct? Do we have employees? Anybody who's going to have employees starting out? Okay. All right, so you have your state withholding ID numbers? Yay, possibly, maybe. Okay. We're all registered with the Secretary of State? Okay. Are we all Missouri businesses? No, Illinois. Okay, or other states? Illinois? Okay. So are you with the Secretary of State? Okay. All right. Thanks, Vicki. I'm sorry. It's okay. We'll get through it. And by the way, she's sending you all. I'm pretty sure you've gotten the email with the presentation. Oh, okay. Well, you'll get it. Okay, but I can roll through it pretty much with no problem. Okay. So from that, we've got those are the key pieces that are critical when you're setting up your business. Your structure's in place, you have a federal ID number, the state that you're operating in, you're recognized by that state with the Secretary of State, and you have some type of annual registration that goes with that, whether it be a basic report that's just verifying what your name is, what your business address is, who your board of directors are, president, vice president, secretary, treasurer, that kind of thing. I'm speaking that language, right? All right. All right. So from there, once you get that in place and you then are kind of on your way with determining if you're going to be invoicing, how you're going to be invoicing, how you're going to set up your record keeping. For most businesses, the record keeping normally starts off in a manual format of some sort. Is there anyone who is automated already with your record keeping? QuickBooks, online, desktop?
Yes.
Okay, online, okay. QuickBooks, okay. I mean, there's a number of different services that are out there. I'm a certified QuickBooks advisor, so I do all online. All of my work is done basically online for bookkeeping. I would encourage that simply because of the convenience, the flexibility, the upgrades, all of that is built into the system. You don't have to repurchase software just because of an update, okay? It's built into the online packages. And that's one of the special features that the onlines are offering. And they're really at a nominal cost right now. So it's like, you know, very much easy to do on a monthly basis, or if you choose to just go with, you know, paying it forward. Once you get your software and you get structure set up, it's important that you really take your time with that setup, because setup can change or make or break how your outline comes. You know, if you are a for-profit entity, you're going to have, you know, your profit and loss, your balance sheet. You want all of that information to flow through to those statements properly. So if you are setting up your QuickBooks, say you're doing it on your own, you want to make sure that you've got the frequency of how your taxes are being paid, if you're paying taxes, estimated taxes, if you want reoccurring invoices for how you want to bill your people, so that if you've got regular invoices that go out, those are going to be done on an interval that's done in a timely manner. Hi, Janelle. That's my daughter. She's in town from Houston, Texas. She does cancer research, and so WashU is one of her sites, and she's in town for that today. Well, tomorrow, where they're going to work. So I told her to come on and see Mom for a minute. So once you get your structure in place for the invoicing, and I'm starting kind of with the invoice because everybody wants to know how to get paid. You'd be surprised at how many people I run into that don't know how to send their invoices or how to timely structure getting their invoices out so that they can keep their cash flow going. Because that's a critical piece in order for you to operate when you're a small business. I mean, unless you have an extensive line of credit, and even if you do have an extensive line of credit, you still want to be very conscious about how and frugal about how you get your cash flow in. And that's a part of the integrity of your business and your setup. And people will respect the fact that, hey, she's providing the service, he's providing me the service, but he's also going to bill me timely. And he's also expecting me to pay timely. So that keeps the flow going, and that helps to set the pace for how you are conducting your business with any of the people that you're doing business with. So from there, the vendor relationships that you will establish is going to be another critical piece. And when I say that, with vendors, you're going to want to, you know, if you're paying them, if you're going to possibly have a $600 or more incremental payments with them over the whole fiscal period or calendar period that you are within, and calendar period will be January to December. Fiscal is going to be any other month in that period and ending on another month that's not a January or December, okay? So a lot of times, just based on if you're going to receive federal contracts or state funding or grants or what have you, you want to know the cycle of how that funding period may be, because that's going to be critical for how you structure your bookkeeping setup. Because they're going to want some compliance measures to be met, and your statements of activity is going to be based on how that fund comes in. Everybody keeping up with me thus far? Okay. Is there anything that you'd like for me to say more on with what I've said so far?
So the calendar time frame is about taxes.
Bookkeeping and taxation all go together when it comes to your calendar or your fiscal period, okay? And deadlines for tax reports are all set around the bookkeeping cycle as well, okay? So you just want to make sure you understand that. So January to December is calendar, and any other month, whether it be February starting your month and ending in January, that's a fiscal. Any other month like that, if it's not January to December, okay? And a lot of the federal grants are always going to be, you know, June and July cycles a lot of times. So if you're a calendar year, it throws you off where you've got part of your bookkeeping done that's going to roll over into the next period. So you want to be conscious of that as well. And when you book your income for those grants that you receive that may be on a different period than you are on, whether you're federal, whether you're a calendar year or whether you are fiscal year, it's important that you note that in your setup, okay, for your reporting requirements. So that's a critical piece, and that's a little more technical, but I just like to throw that out there just so you're conscious of it, okay? The next thing, and going back to the vendors, when you set up your vendors, it is important that if you're paying them $600 or more, that I always like to tell a lot of my clients, that very first check you cut, put that W-9 with it. And the criticalness of the W-9 is that you capture all the data right up front. That means the W-9 is going to be just like you were a W-4 if you were working for an employer. So the W-9 is going to have either your business name or your individual name, whichever you are. It's going to ask for the status. And that means your structure of the person that you're paying, whether they're an individual sole proprietor, whether they're a LLC. And there's some confusion sometimes with people with the W-9. They will say, well, I'm an LLC when I'm by myself. Well, you are a single member LLC, and that means that you check the box that would be individual LLC, okay? And that would be simply because in an LLC, that's going to be reported on a Schedule C and be another schedule that's attached with your 1040. So we'll talk a little bit more about that as we go forward. But that gets, LLC people sometimes get a little confused, and there's a lot of folks out there that just throw the word LLC around and don't realize that you can be an LLC and be a partnership as well, okay? So there's some differences there. The other part to it is, in that structure on the W-9, you may also have either the box as an 1120, as a corporation, or as a partnership, or other, and they may put nonprofit. Being a nonprofit doesn't negate you from issuing them the 1099, okay? And that's what that W-9 is all about. For your own record keeping, everybody that you're paying, any small increments, but once it hits that $600 threshold, that's a person you're going to issue a 1099 to at the end of the year. Corporations are, I'll get you just a second. Corporations, you don't necessarily have to issue them one, but I tell startups just to get them in best practices mode, do prepare yourself for that, okay? Whether you issue it to them or not. They don't have to have it. A corporation does not have to have the 1099. Okay, if you pay them $600 or more. But I want you to set your books up just as if with that mindset, okay, so that everybody across the board will get one.
I had a question in regards to the LLC single member and then LLC partnership. So what if someone, changes from a single to a partnership within that year? Like, should you update their information that year, or should you wait until like the following year to update it?
Very good question. You have to update it when it changes.
Okay.
It affects that year, and you're going to have 2 returns. Okay, you'll have that single member portion that'll be on the 1040 that will go for whatever period that operating agreement closes on, which, by the way, will go to operating agreement. Yes.
Kimberly, can you repeat Tashar's question?
Oh, okay. The question was, if you had been a single member LLC and then you go to being a partnership LLC, do you file one return in the year that change is done? Correct?
Yes.
Okay, and the answer is yes. You do file 2 returns in that same year because you have 2 different structure entities in that same year. The one that is the LLC single member is going to be that operating agreement has been amended and it's closed out. That's the closing date for the LLC single member operation. When you have the operating agreement for the partnership LLC, the initial date of that LLC partnership is the date that Form 1065 is going to pick up for that partnership, okay? And that's a critical piece too. It's a very good question. Yes.
So there's
Robert.
a company that I'm working with
Uh-huh.
from a marketing perspective, and the threshold of what I'm doing is well beyond $600. Do I issue them a 1099 if they're a private company themselves? Not necessarily an individual, it's a company that I hired.
It's a corporation?
Right.
No.
Okay.
Yeah, that was what I was saying. A corporation is exempt from that, yes. Okay, but the thought is that I do want you to track your activity as if you were. That's what I'm encouraging. I'm sorry, he had some stuff for you.
Professional fees, say patent attorney and all that, they will be just a professional fee in the tax return, or I have to issue 1099 to those companies too?
If they are corporate, the question is professional fees. would he issue a 1099 for those that he's hired and paid as professional fees? And the answer would be yes, unless they are a corporation. If they met that $600 threshold, you're still going to issue them a 1099, miscellaneous.
But if they are corporations, then no.
No, that's correct.
Individuals, yes.
Individuals, yes. Yes. Okay. And I say on that very first check out, get the W-9 to them, because you'd be surprised that as a tax preparer, how many people that at the end of the year, I'm trying to find out how many people I want to give you credit on your tax return as a business owner for who you've paid out. If we have not issued 1099s in a professional service mode for those fees that you paid out, we can't take the deduction. Okay? It's not a legit expense. So if you want to expense out that professional services, you need to issue the 1099s when they hit that 600 or more. And if they don't hit that 600 or more, you still need to have a log for what those that may have been 400, or so that you have a total running for all those professional services that you paid for, so you can expense those as well. Okay? Any questions about that? Oh, I'm sorry, go ahead.
I will be transitioning to a corporate non-LLC.
Mm-hmm.
What difference will it make in my taxes?
Okay, question is very good. Whitney asked, she is an LLC, you are LLC now, and she's transitioning to an S Corp. Okay, first off, when transitioning to an S Corp, you will need to file a form 2555, and that is because it's not an automatic election. You have to get approval from Internal Revenue Service, and that form 2555 is that request for IRS to review your firm. It is encouraged, and in the instructions it'll tell you that you should be filing that change within the first 5 months. Okay, if it's not within the first 5 months, that does not negate that you can apply for it. You can still do it, but you need to put a letter of request, kind of giving a reasonable cause saying why you didn't do it timely. Okay, or there's a number of circumstances that, in most cases, that letter is going to grant you that, but they want to just see that you're just not filing it late just because, and you know, they want to see something to justify it. Very good question. Is it working? Okay, great. All right, good partnership here we got going. Let's see. Okay, so we talked, let me hit up here. Business versus hobby, that's a big one. I have a lot of people that say they're in business. I mean, they have the whole shebang, layout cards, signage, advertising, Facebook. I mean, they're all over the place. Haven't earned a dime that is significant in the whole scheme of things of what they've spent, okay? So IRS will allow you 5 years to still play that game that you're in business and you keep claiming these huge losses and what have you, and you then trip yourself up into a situation where you could be audited, okay? They allow you that time frame to say, okay, we're gonna see you try. We're gonna continue to allow you that support. Now, depending on the amount of losses that you have, and depending on, I don't wanna be real general with this because some people will take that and run with it. It is determined just basically by the industries you're in, as well as by the type of income that you're receiving. For instance, if you're in an industry that you right now are doing research and development, and you really can't sell your service or your product or what have you, and you've just been given grants just to fund you to start up, okay, well that's different. That's different because it takes a while in certain industries to catch fire. So the 5-year rule still applies, but it's just for you to understand that you know that 5-year rule applies. And so you need to work with the energy to say, okay, year 3, if I'm still claiming the loss, I gotta hurry up and make this thing work, or figure out a way to make it work, or say why it's not working, or get additional funding so that I can say I'm still working at getting it to work, okay? But it just can't just sit out there and you just think that, okay, well, when the 5-year mark hits, you know, I'm still trying to develop my business. Well, no, it's just not that easy. And I won't say that if you'll be audited, it's just a matter of when you'll be audited. And so with me wearing an audit hat, I always want to kind of forewarn people, don't be too casual with that process. You know, work with the intent to really be generating a profit at some point, okay? Even if it's a small profit, but working towards showing that you're coming up, okay? All right, so we talked about business structure, we talked about ID number, when do I start my tax year, we talked about that. These are some helpful resources. The irs.gov/business has everything you need out there, everything. Anything you need to find any subject matter, once you get to that link, put it in the search box, whatever your thoughts are, there will be something that will come up to support that, whether it be a regulation, whether it be a case, whether it be a ruling, whether it be a publication, whether they're forms, something's going to come up with the subject. Okay? It's rare that it'll be something that'll say can't find. All right? All right, I'm going to the left, right? Oh, the other way. Okay. All right. Well, City of St. Louis, how many people either are operating their businesses in the city border? Okay. So, for the city, you have a business license for the city? Still working on? Okay. All right. The city is interesting, but recent administrations have been evolving, and so the earnings tax, real estate tax, personal property tax, all that has to be paid now before you can get your business license. It used to be, over the years that, you could go in and get a business license and your earnings tax or your personal property tax would still be delinquent. But now they are forcing compliance across the board before that business license is issued. So just be forewarned, if you go think you're going to go and get your license and you've got some outstanding taxes from one of those different sectors, you might be caught, because they're going to have you go from office to office and sign off on them. Okay, so that's just a little tip there. The collector of revenue earnings tax, the Form P10 and W10 are for those that have employees. So that will be your withholding report, your payroll report as well, P10 and W10. The E234 is going to be for individuals, for the businesses. So individuals, corporations, partnerships, all are going to file an E234. And you would check that box whether you have income that's active in the city of St. Louis. Okay, and that's just a report for the businesses that are based out of the city of St. Louis. Whether you run your business in St. Louis or whether the formal address for the business is in St. Louis, city is going to require that document. Mm-hmm.
And you only report if you made revenues 400 or 600,000?
No, I don't know there to be a threshold for the earnings for city, because here's what happens with city. City E234 is really a supplemental document that's going to come behind your 1040. Once a 1040 is prepared, the E234, depending on if you're doing it hand or with another software or a preparer, you should expect to have a 234 if you are a city-owned operated business. Okay.
And Kimberly,
Mm-hmm.
those are city designated codes, so it's a city of St. Louis E234 that you're looking for. It's not something that's issued by the state or federal government.
That's correct. Thank you, Mark. The E6 goes with 1099s. A lot of people get deemed and penalized. The city has really got a force going with penalizing people for not filing E6. E6 is when you've issued 1099 miscellaneouses for your professional services, and that business is a city-based operation, then the city of St. Louis is looking for an E6 form with a copy of those 1099s behind it and the listing of all those 1099s on that E6. Okay, so don't sleep on that one. Those are the helpful resources for city. Those are the websites where you can get all of that earnings tax information, business license information as well. Okay, any questions about city?
Are those the same, do those websites both connect rather to the city collector, or they go to the same place, or is that two different entities?
They're the same place, but one is going to be general. The top one is just the general homepage kind of thing. Okay?
Thank you.
I have a question.
Mm-hmm.
Maybe Tom, if you could chip in on this.
Sure.
We've got 4 feet or 6 feet of lap bench over at the bio generator. We don't have any income, we're not expecting any income for at least next year. Do I have an ongoing business, or is the bio generator taking care of that sort of stuff? Do I need a business license from St. Louis?
What is your relationship with?
We're leasing space from them. I'm a patent attorney, I live in Kirkwood. I pay all my taxes out of Kirkwood, outside of St. Louis City.
And you have a contract with them for the lease of the space?
You're going to need to file a return.
Pardon?
You're going to have expenses, you're going to need to file a return.
Yeah.
You're spending money for research.
Yeah.
Yeah, you're going to need to file a return.
Okay.
Oh, yeah. You.
That's the answer you
Yeah. Thank you. Okay, so we kind of talked about the record keeping system, accounting, QuickBooks. Let me go back to Excel spreadsheets. I love Excel spreadsheets. Don't be shy of them. You do not have, I need people to know they still work. They work for still large corporations, so they work. I mean, it's just, It's just the amount of time that you might want to apply yourself and put into developing the spreadsheet that fits your needs, okay? So if you choose not to go and get a sophisticated accounting system or what have you and just want to do your Microsoft Office Excel and you're proficient in that enough to meet your needs, go for it, okay? Tax preparer won't turn that away, okay? Because if it's, as long as it's a well put together document. It's information that if you were to bring that to me, I would just have to say, you know, I'd go through it and verify information based on whatever receipts that I would want to say do a spot audit on to confirm that that information is actually there and those numbers make sense. Then I would take that and I'd ask you to sign off on it that it's true and correct. We're going to prepare a return, okay? So, tracking your income expenses, fixed assets. I'm going to hit that because I think that's going to apply to a few people here. Fixed assets are going to be anything from the vehicles that you own as a business owner, the building that you're conducting the business in, the equipment that you conduct the business with. You know, if you've got supplies and what have you that make you make something, that's a piece of a fixed asset. And I would strongly encourage you to create a log from the time you buy it. Put those receipts in one file of all of the fixed assets that you have. Just so even if you don't make the log as detailed as it need be, you've got the documentation there to support it. If you were to bring that to me, I'd create my own amortization schedule. I'd create my own depreciation schedule on your behalf to get you started with your return. Yes?
I have a question about receipts.
Okay.
So overtime receipts paid. So do you suggest like make copies of those receipts or does your bank statements should your bank statements be sufficient enough for what you bought?
What's your name? What's your name?
Tashara.
Tashara, that's a good question. And I love that she's even posed that question because trust me, there are some people that I've seen it in 33 years, I've seen it in every different direction from a jack in the box with receipts popping out to no receipts, okay? And they want to tell me what they spent. And I want to say, no, that's not going to work here. Okay, so in this case, I encourage if you are a small business owner and you are not good with tracking activity, then get a debit card or get a credit card and use it specifically and only for business activity, okay? That keeps it simple, safe, down and dirty. That way, if you bring me 12 months of statements, we can roll from there, regardless, okay? And in most cases, that information is going to be inclusive of all the details, whether you went to Walmart or whether you went to Micro Center or where you know, whatever you did, it's there if you're using those same cards. Yes,
Okay,
Andrea?
so you're saying what I could do is pay with a credit card,
Mm-hmm.
but sometimes I don't find a receipt. Are you saying that the credit card statement will
Be sufficient. Mm-hmm. And I would, yes, the answer is yes. And I would encourage you monthly in your own way. If you are making, some of the credit card statements don't give all the detail. They may give a location sometimes. But if I were you, I'd go through and just draw a line and say what it is, you know, on that one line. $49.99, it was books. Or, you know, and just write what it is on there. That's documentation. It meets audit requirements under the Internal Revenue Service codes. Okay, I've been in several federal audits and state audits. Auditor has to accept it. It's 85% proof. You got it, okay? They're not going to disallow it. Good question though, because the receipt piece is a critical part, just like documenting your income, but that receipt piece, you know, people come up with numbers out of their head. Oh yeah, I paid $600 for this. Okay, so when and how can we track that? Or can you help me? Do we need to go back somewhere and see if we can retrieve that receipt? And it just is invisible, it doesn't happen. And so unfortunately that's an expense you may have truly incurred, but as a preparer, I can't just accept your verbal statement on that, okay? All right, so we missed that deduction. Let's see, financial statements and budgets. Does anybody have a budget for their business? Anybody? I asked that and I'm really being nice about it. I just want to know, because I think that budgets just kind of go out the window. There's that word exists, but it just doesn't exist on paper, or, you know, it's a concept. But it's important that if you do nothing but just say, what does maintaining my office, what is my budget for my office? How much is the paper? How much is the ink that I spend each month? How much is, you know, my internet? How much is my cell phone? You know, those are budget items before you even get to your materials to help you do whatever you do. Yes.
So when it comes to things like that, like internet, where, and in your car, where it's like, okay, I use it personally, but I also use it for my business sometimes, like, how do you draw the line between, you know, a service like the internet or a service like printing that you may print personal things as well as business things? How do you sort of divvy that up on what can be counted towards the business and what shouldn't?
Good question, Erica. This is all good stuff. I want to go with the tech side of things because everybody's so savvy with their smartphones now. There are a ton of apps out there that track your mileage, business mileage, that track, you know, business expenses. And, you know, if you went and bought gas, $20 worth of gas, but you know your trip is going to be 14 miles of that $20 worth of gas at $2.40 a gallon. Well, that app will track that for you. Or if you want to be old school, old fashioned, stop at Walgreens, Office Depot somewhere and get your mileage log. And when you get ready to make your business trips, just look at your tripometer from start to end, document it. If you use your car, say, I have some clients that are in sales. They only use the car for sales. They don't do any other trips because they have another vehicle that they use when they get off work, okay? That tripometer starts their week, they close it out at the end of the week, and that's what they submit their expenses for. I mean, you know, you got to come up with some kind of rationale for how it works for you. But in some way, you are required to document and separate what those expenses that are personal outside of what's business.
Your,
Kurt?
yes, office at home,
I had one.
yeah, 50%.
No. Okay. Office and a home. I've had one for 34 years I'm in right now. Okay. Office in the home. 2 accepted guidelines that IRS will accept. You can either use square footage, depending on the amount of square footage of the entire home, and then take the square footage that you actually use for your office. You can include a bathroom or lavatory in that square footage. And if it is for storage or housing inventory of some sort, you are allowed additional space for that. Okay, but that would be based on the square footage side of things. If you were to do it per rooms, then you would need to still include the bathroom, a bathroom or lavatory, what have you, and you would then take how many rooms you actually use for office space. Okay, and divide that by the number of rooms that you have, and you're able to take that. It is important that you don't abuse that, and I don't say that lightly because that is a number one hotspot. Yes, that is a number one hotspot, and when they come at you with that, they come hard because if you say I'm claiming 20% of my total home expenses, that means your mortgage or your rent. That means your utilities. You're taking 20% of that. You're taking 20% of your telephone, your internet, or what have you. You're taking 20% of saying, I've had a person to bring me that they had a housekeeper. Well, that housekeeper cleans their office. They're taking 20% of what they pay her for the year. I mean, you know, it just goes on and on, but you need to document that, and you need to make sure that you've got that appropriate. Now, you can't have a closet for office space and want to claim that percentage for the amount of square space if it's not really equivalent, and that's a judgmental call. So I just ask you to be careful about that. Wait a minute, I had a question right here, real quick. Andrea?
In terms of storage, I never took a deduction because I thought that the room had to be 100% dedicated for whatever. And where I keep my supplies is a freezer. Or some of my supplies are somewhere else because the freezer's in the room where I keep my supplies. So how do you, is it really rigid about the 100%?
Yes and no. And I say yes, that they want you to go in with the intent of being 100%, if that's what you're saying. And I say no, is that if you are sharing the space, that is another piece that is going to be broken out for your home, for your personal use. So you got to walk a fine line with that, and in some cases, we have to throw it out and say we're not going to even deal with it because it's too technical for me. I don't want to have to keep up with all that. There's those calls that you have to make. But if it's growing and you know that that's going to be a space that will evolve 100%, I would encourage maybe to consider doing it.
It has to do with where you live.
Okay. Well, that might mean a little bit of re-outfitting your space, to meet your needs, and that's a deductible expense. If you're now here's that, you touched on a good place here. Re-outfitting your space to meet your need is also a deductible expense. Okay? And so as you do that, that means if you've got an electrical line or a plumbing system or something that needs to meet the needs so that you really can make that space 100%, that expense you incur to do that is deductible.
So if I encourage this to move the freezer out, because the freezer is for personal use, so if you
Moving the freezer out and you using that extra space where the freezer is for more inventory space,
right,
then yes.
that's legitimate business.
Sure, sure. You're accommodating the outfit of the space. Now you got to be able to tell that auditor that. If that were to happen, where you'd have to explain that as to what that particular expense incurred.
Pictures, right?
Yeah. And pictures, yes. Patrick?
If I'm on a 20% basis based on square footage, can I say nevertheless, I have to have internet and I have to have a cell phone to do my business, so I'm gonna deduct those at 50%, because those are special things I need.
Well, is that cell phone using personal and business use?
I can show that more than half my calls are business calls.
Okay, then there you go. You take that percentage. And so that means that you've got that cell phone bill to show how much you pay. If it's a set amount, you don't have any overages and roaming and all those other things that you don't have to worry about justifying what that is for. Then yes. Good questions. Good questions. Yes. All right. Okay, I don't want to overstate this. We were talking about the budget piece, and we kind of left on that, but I do want to encourage you to start trying to put budgets together, incremental. Okay, come on. That's a good question. I've not seen that done. I've not seen that done. It either is or isn't, and it's amount about the space size. Yeah, I have not seen that one done. I would think that would probably be a good argument to have. Yeah, but.
That's actually an interesting question, because if you rent out like an incubator kitchen,
Mhm.
you have to pay, in some cases a membership, but then you also have to pay per hour or per time of usage, because it's a shared space. So you have to pay based on the amount of time you spend in that kitchen as well. So how would, I don't know, like with the case of, because that sounds similar to what she's saying, although it's just at home. But in a space like that, that's their rules, that's how they're set up.
And that's key, what you just said. That's their rules. So you're contracting to do that somewhere, right? That's her personal home. That's so you've got an agreement that you've accepted those terms. Yeah. Okay. Good questions. All right. I do want to go back real quick. Financial statements. In setting up, whether you do spreadsheet, whether you do QuickBooks, whatever you do, ultimately we are trying to get to a reasonable profit and loss statement balance sheet. Profit and loss is going to show all the income for a period and all the expenses for a period. A balance sheet is going to show what you are as of a specific period. This is what your worth is as of a specific period. What the bank statement says it's in the bank for me as of December 31, 19, when that comes. What assets do I have? What liabilities do I have as of a period? So that's the difference. Balance sheets are critical, and that's why when someone gives you a set of financial statements, the balance sheet's going to be on top most cases, because the balance sheet is really the meat of the matter. They don't really care about, they want to see what you spend and how you spend it, where the money comes from and all that. But the balance sheet is going to say, here's what your worth is, if we're talking about doing some lending or whatever. Okay, so just know there are important documents. And there is a method to the madness of getting the proper information on that document. So don't skirt on that. And if you hire an outside professional to support you with your financial statement, just make sure you're holding them accountable to good information, and you're providing them good information, and you know that you should be looking on that balance sheet for information that you can track to your bank statement, you can track to a loan document, you can track to your credit card statement, or something that's going to show as of whatever that period they have that statement for, this is what the balance was on it at that time. Okay? That's the most simplest way I can put it. Because I see balance sheets sometimes, and I'm saying, okay, so where's the support? Let's look and see, if we're going to do a little self-audit, if all this matches. Well, no. No, you can't give me the March statement for a December balance sheet. We got, I need December's bank statement, okay? All right. Cash flow statements, cash flow statements is a position to show you where you're going to be over a period of time. And it takes out blocks of time for showing how your cash comes in, how you spend it, and what have you. That would be helpful if you're receiving grants and grants hold you accountable for how you spend the money and the timeliness and the restricted use and all that kind of thing. So that kind of goes with the cash flow statement. Business taxes. Individuals are going to be income tax returns. Estimated taxes are going to be for some individuals that may be contractors and they receive their money and no taxes are taken out and they pay their own taxes on a quarterly basis. And in some cases, I've encouraged clients when they can't be self-disciplined to do it on a quarterly basis, pay it like a bill, pay it on a monthly basis. IRS is going to take it whenever you send it in. State is going to take it whenever you send it in, okay? But if you don't send it in, you do have penalty consequences when the return is prepared at the end of the year and you've not paid in. There's no credits out there for that money that you've earned. So that means that's why you get these whopping tax bills. This past year was, excuse my language, was hell, because a lot of people did not make estimated tax payments timely, they did not adjust their W-4s timely, and they were under withheld, and they had never been before. They've always been refund people. And I had to explain, I had to add 30 minutes on 30% of my clients this past season, and that was costly to me. I'm eating up time just explaining the rules that I've not had to explain because the law has been this way for 30 years, and now it changed. This year will be another nightmare, so we'll get there. Employment taxes. If you have employees, it is critical. It is critical. Employment taxes will put you out of business. Non-compliance. If you don't file your 941s, federal and state, if you don't pay that tax, because that is not your money. That is money that you are entrusted to hold on behalf of the employee that you have hired, okay? So please, please, please respect the rules pertaining to employment taxes. Do your best to pay the money. If you can't pay it in the quarterly or the monthly intervals, pay it every pay period. I have some clients that pay, when they pay their employees biweekly, they send a check off for their employment tax portion for that payroll, just to make sure that money gets out of their hands. Because it's the cost of doing business, okay? So don't take it lightly. Any questions about taxes or anything related to what we just hit there? Yes?
Yes, ma'am. I have an S corp already set up in the health and wellness industry, creating a tool in the health and wellness industry. But so I was putting everything under my current S corp and just labeling that as I'm going to basically be filing that and claiming the expenses on my existing S corp. If I make a mistake there, do I need to file and create another business entity for the tool, or am I okay to run everything through that?
No, it's okay to run through there.
Okay.
Yeah, it's okay. Because it's supporting that same activity. It's not a whole nother activity.
Sure.
Yeah, it's all purpose driven. Yeah, that's fine. Okay, chart of accounts. I'm going to hit this kind of lightly here. Income, we kind of hit on some of this already about the different sources of income, whether they be grants, sales, donations, etc. Okay, that's self-explanatory. Expenses, any of the accounting activity, that's going to be your overhead, just the cost of doing business, just to say my name is on the board. Okay, just the basic things. Office supplies, repairs, those are other examples of things that it will cost you to do the business. Okay, the fixed assets, we hit on that already about buildings, land, vehicles, etc. Liabilities, loans. I do want to say this. The market is changing. And so loans are, they want everybody, they want to give you some money now. If you've got a decent credit score, you can pretty much get some money for your startup. So just know that as you start when you start with these loans, that you track them from the interest rate, from the period that loan is intended to be paid off, and understand what the end payoff is. There was an article just this morning, I heard on the radio driving in, that they were talking about car loans. And they were talking about how the car loans are now going to go to like 80-something months or something like that. I mean, it's crazy. They've extended it from 72 months again. I mean, the car's already upside down after 4 years. So, think about it. If you need to refinance it or get out of that loan, or, but think smart about your loans so that you don't really exhaust all your cash, just paying off a loan. It takes you forever. Double up those payments or something to get yourself out of that, okay? I mean, it's not a bad thing to have them. I'm just saying be smart about how you use them. when you get them, okay? Equity, assets minus liabilities equals your equity. Okay, equity is a piece that I have, some people sometimes I have to fight with because they want to put everything into retained earnings. That retained earnings seems to be a hot spot where they want to make, whatever you can't figure out where it goes is going to go in retained earnings. No, it does not. Startup expense, all of that. No, it has a place. So just be careful and make sure that you understand that when you're setting up and that you understand what you're booking as what you consider, equity for your business, that really is equity, okay?
Would cost of goods sold, would that be an expense? Is that like I'm buying materials and stuff, but that inevitably is going to be used in the final product?
Yes.
So there's, right, isn't that?
Well, cost of goods sold is a category that's going to reduce the profit that you are going to, before you even make any money on the item. The cost of goods sold is a piece to help you make that item. Okay, so you reduce that by that, yes. Okay, any other questions? This is all good stuff. What's my time like, am I?
You got about 5 minutes before the Q&A, and then you'll have about 10 minutes before the end.
Okay, well we hit some of this, most of this already. Anything here I need to hit a little more? Anybody? Okay, we'll keep going. This is an example, I just wanted to get to this to show you. Because believe it or not, in some cases people don't really look at balance sheets, but I just want you to see the items that are a part of a balance sheet. So I'll give you a second to kind of take a look at that. As you can see, those items that are considered in items that would fit a balance sheet. And those are pretty general.
What's the rate for mileage?
This year, it just went up. I want to say this year was 52 last year. I think this year is going to be 53 and a half or something like that. Yeah, it's like a penny or 2 pennies that it went up. And speaking of the mileage, I'll just hit on this. There is a charitable mileage increase as well. So just know that if your business does some charity work and you have mileage related to that, there is a charity mileage that's a different rate than what your regular business mileage is. So do take advantage of that.
That's like a standard, like, state thing? Or-
That's a federal law. It comes out every year, and they adjust it. This past year was 53 cents a mile, but it's going to go up again. I know it's gone up. I just don't remember what.
Have to do that particular rate.
Well, that is the rate that is a standard. It's called the standard mileage rate. So that would be the deductible portion of what if you're computing your mileage. That's the number, the cents that you're going to times every mile that you take. 0.53 or what the new one is. No. I'm sorry, I don't recall I know there's a new one, but I don't recall. I think it went up a penny and a half or something like that. Any questions about balance sheet? See the items that are a part of it. And then we can go to the next one. So this is the income statement. This is kind of general stuff that fits the income statement. Profit and loss, income statement, you'll see it different ways. If it's a nonprofit, statement of financial activity, I mean, you'll see call different names, but that's what you have there. Okay. All right. That's cash flow. Okay. Bookkeeper versus accountant. A bookkeeper records your daily transactions in an organized and consistent manner. That's that person that you dump all the receipts to. You just put it all together for me. Okay. If the accountant is, you would have them and give them that same set of receipts. They're going to organize and do all the daily transaction activity. But they're going to also analyze and they're going to advise you on the impact of how that money was spent. Okay? They're going to say, you could have waited. You could have possibly, bought all these supplies on discount on Amazon. Or you could have, there's a better way to spend your money. There's a difference in the cost. So if you're running a tight budget, the bookkeeper and advisor and an accountant role is going to be a little different in how they look at that information. Okay? The bookkeeper is entering and paying the bills, the invoice and record payments, and processing the payroll, reconciling accounts, and making the tax payments. The accountant is doing the tax preparation and the audit in addition to those other items that have already been done. There are some cases where I perform all with one client. Okay?
So what will the difference then between the accountant and the CFO, chief financial officer?
The financial officer is involved in investing and making decisions, direct decisions for the business. The accountant is really just accumulating and analyzing the data more so and making recommendations based on what information they have compiled for you. In other words, the accountant did decide for you to spend that $500. You know what I mean? They just see that you spent it and they say, okay, what did you spend it on? Why did you spend it? Was that a justifiable expense? You know, they take you through that process. Okay? I would hope the financial advisor, the CFO would be doing the same thing, at least with the same mindset. I want to say this with some emphasis. Show love to your bookkeeper or your accountant. I really want to say that. Stay organized as best you can. Everybody's not meant to be, you know, the bean counter, and I get it. But try to stay organized. If it's no more than just have an envelope for every different expense. All the phone bills go in one folder, all the utilities go in another one, all my supplies for the office go in another one, et cetera, okay? All right? Every time you pay professional services, just put them all in one folder. You know, just some kind of level of organization related to the subject. Okay? That would be helpful. Versus bringing it to me and I don't know your business and now I got to try to paint the picture and help figure it out without you there. Try to see how that goes, you know. And then when I get finished with it all and I'm saying, okay, I got question marks by this, I got highlight, yellow highlight, orange highlight, come on, we got to figure this out. You left me, you abandoned me with this package of information. I don't know, I did the best I could, you know. I'm Googling the names of some of these businesses just to figure out, is it a restaurant? What is it? It's a car repair place. How do I know that? I don't know, you know. So that's what I'm saying, show some love to the accountant and the bookkeeper, please. This one here is a big one. Respond timely to requests, because right now I've got one on my desk. She sent me her information on September 12th. She needed it completed on September 21st and did not tell me that. So how was I supposed to know? So I'm working it into my regular flow of work that might not have met that 21st deadline. But if you don't respond and communicate when we say we need things to meet a deadline, you can't expect us to put you in front of the line. I mean, that's not fair to the other clients who've been timely and been compliant with trying to meet the guidelines for us supporting you, that is. Okay? So discuss the financial decisions also too. And this is a good one too. With you all being new, feel free to make your accountant your partner. Call them up and say, hey, I'm thinking about getting ready to do this. Does that matter? Tell me should I do this way? You'd be surprised at how good that makes your accountant feel. That you allow us to be a part of your decision making and use us for more than just a one-time-a-year event, which is preparing a return. Okay? You'd be surprised. You get much more out of the relationship if you were to do that. Okay, these are some references, and these are just a variety of different references for different freebies with trying to set up your books and do things on your own or get examples of information. We're going to get some questions in a second, but I also want to tell you this. In the email that Ricky will be sending out to you, okay, she sent it, you will have, just based on the whole group, I was able to take some time and put together some of the IRS hot topic items, business tax credits, credits for deductions for your business, research credits, credits for increasing your research activity, and there's different forms that go with those, and I included those in the instructions with it. So these are things that I would suggest that if it fits your industry, take it to your accountant, take it to your tax preparer and say, hey, how does this affect me? You know, or take some time and read through the instructions and understand the purpose of this. But with it being a lot of business credits that are available out there, there are time constraints that go with all of them. And so I would just encourage you to take some time and research that. That's growing and knowing your business better. Any questions? Anything I didn't cover that someone would like for me to? I know I kind of went through it a little fast. Yes.
So,
Julian?
my question is how often should you communicate with your accountant? Is it a weekly basis, bi-weekly basis, monthly basis, just have a communication that you talked about? How often should you communicate?
Very good question. He asked, how often should you communicate with your accountant or your tax preparer, what have you? I say quarterly. I say no, I would say the frequency of it would depend on what your needs are. Let's go back to that. But I would say at least quarterly, just say, hey, how you doing? This is what I'm doing, da-da-da. 2 minutes off the phone. But if you've got some activity going on that they're gonna need to be involved in, I would say at least every 6 months. Because right now, I'm about to, in fact, it's going out probably next week, my planner for my small business clients that I file Schedule Cs for and Schedule Es. Those are the rental property people and the small business people. And whether the LLC or whether it's a sole proprietor. I'm sending out reminders for them. Did you file your estimated taxes? The October deadline is here for the individual extensions. I mean, I've got a whole little list of items that I hit on those. And the phone will start ringing to say, I thought I did that already. I don't know. Well, maybe you didn't have me do it. I mean, you might have done it. But, you know, just to get them thinking and not waiting until holidays hit. And then it's January. And then we're scrambling to try to get old documents to support expenses or agreements. Or I don't have W-9s from all the people that I paid or whatever. Start that process now. This is what this part of the year is for. September and October is about cleanup. Okay? Question?
So I think this might be, you know, asking in addition to that. So what if you like missed or skipped a quarter?
What estimated?
Well, payments or just, you know, filing your taxes, your quarterly taxes. Like,
Okay.
are you able, like, as long as you get it done within that year, like, will you still be okay?
The question is, good question, is what if you missed the estimate, what if you missed a quarterly payment? As soon as you are able to file that return and pay it, go ahead and do it. I would say filing is the main number one priority. To get the return on the books, okay, with the state and with federal. Get it on the books. If you are struggling with the payment process, you can always have an option to be able to set up a payment arrangement. But get the return on the books so that you can avoid the failure to file penalty. Failure to file penalty, failure to pay penalty, and then the interest that's accruing on that balance. So if you eliminate one penalty, that's helpful if you're still on the struggle bus with trying to get things done. Okay? You guys have been great. I liked all the questions. Thank you so much. Good luck with all your businesses. Really.